Hello, welcome to another LawyerFair business podcast. My name is Andrew Weaver, the CEO at LawyerFair.co.uk, and today's guest is Goncalo Vasconcelos, who is the co-founder and CEO of Syndicate Room. And in fact, when we chatted, Goncalo, the night before, had been attending a rather nice soiree as Syndicate Room had been named one of KPMG's top 100 fintech innovators, and they were celebrating that with KPMG the night before this chat took place. I wanted to find out from Goncalo why Syndicate Room has been so successful, frankly, and also what it is they do slightly differently to other crowdfunders in the market. And also more generally, how the success of Syndicate Room and other crowdfunding platforms has changed the relationship with VCs in particular, and whether it's now a much more collaborative environment. But I'll let him explain more. Apologies about the phone line. It isn't the greatest quality in the world, but the content more than makes up for that.
Money don't get everything, it's true. What it don't get, I can't use. I want money.
No, Nick used to play with the orchestra down there, so we had many a happy day on the seafront at Estoril and Cascais. Lovely area.
That's pretty cool.
Fantastic. Well, listen, Goncalo, thank you so much for joining us on the LawyerFair podcast. As the listeners will know from the introduction I just made, you're a co-founder and the CEO of Syndicate Room, and I'm going to quote something from your Twitter feed, if I may, and just ask for your response. And you mentioned that 1 in 5 crowd-funded companies fail, but only 1 in 65 at Syndicate Room fail. What's the difference? Why are you getting those odds more stacked in your investees' favour?
So it is very important to clarify. Those are not odds. Those are our track record so far. So that's not the sort of failure rate that we guarantee or anything remotely similar to that. Just to make it very clear to listeners.
Yeah.
So the failure rate in crowdfunding has been shown by a very good report by independent researchers called Altfi Data. And they show that the failure rate within crowdfunding is 1 company out of 5 so far, which is actually remarkably low compared to the average failure rate of just normal businesses, and particularly around startups. So that's really encouraging in terms of when it comes to crowdfunding and the track record that crowdfunding is getting, and the success that crowdfunding is getting here in the UK. What we have had, when I wrote that tweet, was 1 company out of the 65 that we had funded so far failed. That company was called Social Games, and what we did was we were incredibly transparent, and I wrote to all our members, those that invested in that company and those that didn't invest, telling them, look, Social Games unfortunately failed. You know what? This happens. The entrepreneur, and he's an incredibly inspiring entrepreneur. He was very humble, very honest. He came in front of a camera and explained what the company had tried, why it failed, what didn't go according to plan. And that gave a huge amount of confidence to our members to understand that, A, businesses do fail. It's a risky proposition. B, there are real entrepreneurs behind these businesses trying their damn best to deliver. And that's why I wrote that tweet, was because we had 1 failure out of 65 back then. So we had raised money for 65 companies. Mm-hmm. I think that the real answer for that is our investor-led model, whereby what we do is we allow the crowd to invest alongside professional investors. Mm-hmm. This doesn't guarantee any riches, and it doesn't guarantee that all companies will be successful. My opinion is that professionals with the experience in investing into these companies, just because of their experience, they are more discerning. They filter a lot more. They've seen a lot more in front of their eyes in terms of early stage companies, and they're very careful where they invest their money, because they invest very significant sums. We're talking about 6-digit sums most of the time. And what we allow is the crowd to invest alongside those investors in a very fair and transparent way. And I think that's why we've had a much better track record than crowdfunding as an industry, which in itself has had a really good track record already.
Well, listen, I'm going to apologise for dropping those statistics on your toes. It's very difficult to start a conversation about crowdfunding and Syndicate Room by having to answer to a statistic about failure, because just to endorse your point about actually the crowdfunding stats are incredibly healthy. I mean, discuss with any business angel group the failure rate, and you'll find that it's probably a lot higher than 1 in 5. So you beautifully articulated your way out of that tricky opening question, Goncalo. But in terms of
I just answered the truth.
no, it's fantastic. In terms of from the investee's perspective, then, would you say that the key difference in using Syndicate Room as opposed to any other more generalist crowdfunding platform is that the sophistication of the investors? Is there a marked difference in how they have a dialogue with those investors? Is there something that defines the way an investee company relates to Syndicate Room any differently to others?
I believe so, yes. So we target high net worth and sophisticated investors, and our minimum investment is £1,000. And I think it filters out a lot of people that, if you invest in just £10, you don't really think that much about it. And you can add to a very significant number of people and a very significant amount of money. But if everyone is putting £10, £50, £100, no one is really kicking the tires properly or thinking about it that seriously. And to me, that is an issue. And that's why we have the minimum of £1,000, which is, on one hand, for business angels, that's pocket money. But they tend to invest much larger amounts, so they tend to be pretty careful on what they invest.
Yes.
But for the majority of people, £1,000 is a nice holiday, right? And that makes people think before they invest. And that's exactly what we want, is people to take it as an investment. It is a risky investment because it's equity investment into early stage companies. In the terms of spectrum of risk reward profile, is high risk, potential high reward. That is the nature of this type of investment. But to me, it's incredibly important that people understand the risk and they take it as for what it is, which is an investment opportunity, and that they think before they invest.
Yeah, absolutely. And the other side of the coin is that the criteria for an investee company coming onto the platform is that you need, I know that the crowdfunding model generally is that they encourage you to, or have already raised a certain percentage, but that's absolutely part of your criteria, isn't it? You need to have seen commitment of a certain level before you'll even entertain an investee company.
Well, it's actually a lot more than that, because what some crowdfunding platforms do is they incentivize a company to have a certain percentage of their funding round already in place from whoever, or friends and family and so on. Whereas what we do, we have a lead investor that is an experienced investor willing to put their name forward, investing a significant amount of money, which is disclosed on our platform, and is the person that is going to help the company in terms of corporate governance, in terms of support to the entrepreneur, the mentor. And I have my own mentors, and they add a huge amount of value to me as an entrepreneur. And that is where you marry the two. So you're marrying business angels and leveraging their capital with a crowd, and that's really, really powerful. But that is different from going live to a crowdfunding platform and having a small percentage from your friends and family to generate momentum. That's a whole different ballgame.
Understood. And the relationship you're having with VCs, I mean, it's more of a collaborative relationship, I guess. And is that changing the way that VCs are interacting with the market?
Yeah, hugely actually, because when we started, VCs above all were very, very skeptical about it, and they said, how can it work? And you don't have professionals making investment decisions. But actually, people are not stupid. People can make their own investment decisions. What they need is the right amount of information. And VCs, I'm convinced that the model of the VC is going to change very quickly. I know it is already changing. So we are working very collaboratively with some VCs that have spotted that the market is changing, and they go, right, what we need is to work with the market. And then you have other VCs that they refuse and they want to deploy their capital and so on. And I think their model is going to be, I think they're in for a surprise, to be honest. But I think the clever VCs that are working in collaboration with us are going to do very well. No doubt about it.
It's a fascinating market. And in terms of Syndicate Room, I mean, you've started the year with a serious bang. I mean, you're top 100 fintech companies with KPMG. And I know you were at an event last night, so I hope that went very well. And also, I noticed there's a collaboration with Gust. I mean, what's the impact of that in terms of what Syndicate Room can do?
So the first one, which is the top 100 fintech companies in the world by KPMG, is obviously it's great for the ego, but in terms of business model, doesn't really change anything.
Yeah.
But it's great to be recognized for what we are doing and how we are growing. Our partnership with Gust. So Gust is the largest angel investment platform in the world. It has been behind about $1.8 billion worth of angel investment. They've been live for, I think, just over 10 years. Mm-hmm. No one has ever heard of them because they're not a household name, because obviously they are only for business angels, and they tend to be a very small number, very high net worth individuals. And that's exactly what we've been trying to break, is why should just be these individuals having access to these investment opportunities? Why should they be so exclusive? And our partnership with Gust, our collaboration with Gust, is remarkable in the sense that now business angels, like the VCs that are collaborating, now business angels are realizing the power of bringing the crowd alongside them, because before, any investment opportunity that would be above, say, £500,000 would start to become quite heavy for business angels. To find business angels put $500,000 together, it isn't that straightforward. Mm-hmm. And then, but now, suddenly with our syndicate model that we use at Syndicate Room, they can put still the same 200, 300, £500,000 together as they would usually do. So they're still running the same risk, but they can look at much larger funding rounds. They can look at 1.5, £2 million funding rounds without being afraid of them, because they will still invest the same amount of money that they are willing to risk. And they're just inviting people in to share the risk and the reward with them. So if it goes badly, everybody loses their money, mm-hmm. or the same amount of money on a pound per pound invested. If it goes well, the whole idea behind Syndicate Room is that it doesn't really matter if you are a private investor investing £1,000 or an institutional investor investing £1 million. On a pound per pound invested, everybody should make or lose the same amount of money, sharing the risk and the reward in a very fair way.
Well, absolutely, and I think it also fills the gap that there always used to be, and may still be to some extent. That little gap between the low seed round and the VC round. Some people would say previously it was sometimes more difficult to get that 500, 600k raise, but your kind of collaborative platform brings together different parties to enable that in an easier way than perhaps in the past.
Correct, and that's the beauty of it, is the equity gap. Now suddenly you have a lot of people online wanting to invest, a lot of entrepreneurs needing that capital within the equity gap, sort of £500,000 to £3 million, mm-hmm. where it's too large for most angels, is too small for most VCs. And now by syndicating those two parties together, the business angels and the crowd, you resolve that equity gap, which is brilliant for UK companies.
For sure. And what's the sweet spot for Syndicate Room raises?
Anything between £250,000 up to €5 million. And the reason why it's €5 million, and lawyers listening to this podcast will understand that, is the prospectus directive that restricts us to raise up to €5 million before an approved prospectus is required.
Right, understood.
So that's really our restriction.
Yeah, understood. So all of these awards, you've got 3 goals on crowd rating. What else is happening at Syndicate Room, Goncalo? Can you reveal any exclusives on the LawyerFair podcast?
Any exclusive? So yes, we've actually had more than 3 goals in crowd rating. We've had more than 1 now, okay. which is great. Any exclusives? Oh, you asking me to stay tuned.
Stay
Because
tuned.
there will be very, very, very cool developments in crowdfunding very soon.
Yeah.
And a few things that are going to be game changers to crowdfunding and how crowdfunding is perceived.
Well,
they're really going to bring crowdfunding to mainstream rather than being alternative finance. So stay tuned. I can't tell you yet.
Listen. I'm very excited, and in the interest of disclosure, as I mentioned to you before, I have some knowledge of Syndicate Room through a raise of a colleague of mine. I also met Tom at a Tom Britton, who's your co-founder, I think, isn't he?
Yeah.
I met him at a networking event right in the early days of Syndicate Room. So I have followed your progress and your success very closely, and that's why I'm appreciative of you joining us. Goncalo, thank you so much. Lots of great stuff in there. Good luck, and perhaps when you have made another big splash or two later on in the year, we can have you back on.
Fantastic. Thank you very much for your time.
Thanks a lot, Goncalo. All the best.
It's the best.